friends. Good morning, good afternoon, good evening, whenever you are watching this video. We are here for the revision of paper 3, Cost and Management Accounting, a 100 marks paper. And topic of this video is joint products and byproducts. A very easy topic, to be honest to you, a topic which in itself is literally an extension to process costing. I'm sure all of you remember that this topic is to be done after process costing. It's merely an extension and a topic which is often repeated in the paper. So, easy topic, repeated one. Let's hope the combination continues. To begin with, let us do some theory and then we go ahead with the problems. Very basic, simple theory that I would like to tell you. The objective of this chapter is to apportion the joint cost. I repeat, the objective of this chapter is to apportion the joint cost to various products. And naturally, when you want to apportion the joint cost, you will need some methods. Second objective of this chapter is to determine whether to process a particular product further or not. In very technical words, this is known as a depth of processing. It's a conceptual word, I must tell you that. So these two are the major objectives of the chapter. There are various methods, no doubt about that. But presently, I will just introduce few terms, and then after introducing few terms, I will speak briefly about few of the major methods. Major, I repeat, major methods. Then I will go on to few problems. That is going to be our flow. I go ahead with some terms. In every process, there comes a point at which products start becoming separately identifiable. Wait, I'll show you something. That's the point. Let's say at this point, products start becoming separately identifiable. Let's call them products A, B, C and D. So in technical words, terms as we call it, this point is known as split off point or separation point. Now, the products which have become separately identifiable, out of these products, there will be some products which will have significant and similar sales value. I repeat, significant and similar sales value. Then those products are known as joint products, whereas the product which will have an insignificant sales value is known as a byproduct. Like for example, in dairy industry, milk, butter, cream, cheese, etc. joint products. Molasses in sugar industry, byproducts. Let's say in my example, A, B and C are joint products. And D is a byproduct. Now I'll just change the classification a bit. I'll call them as joint products this way. I'll just put an arc up. Now naturally you will incur some cost till split off point to process the products, but till split off point all these products are not separately identifiable they'll become identifiable at split off point. So till split off time point, they all will be processed simultaneously, or in other words, jointly. Hence, the cost incurred up to split off point is known as joint cost. And let us assume that these three products will be processed further. And obviously, these products, when it is processed further, it will not be done for free. Some cost will be incurred. The cost which is incurred to process this product further is known as post separation cost. Or further processing cost. Actually, as you can see, I've left some gap. The actual or the real name or the real word of post separation cost is post separation manufacturing cost. So these are the few terms which I wanted you to understand. I gave you the objectives as well. There are certain methods. I will speak or rather I'll actually explain with amounts within some time, but in brief, certain methods I'll speak about them, like output method. In output method, you will apportion the joint cost on the basis of output. In net realizable value method, NRV method, you will apportion the joint cost on the basis of NRV. NRV is final sales value of output minus post separation cost. And well, then there can be, in output method, we apportion the joint cost on the basis of output. In actual sales value method, multiple names that this method has, we will apportion the joint cost on the basis of actual sales value of output at split off point. Whereas under NRV method, we will apportion joint cost on the basis of NRV. What is NRV? Net realizable value. How to calculate? Final sales value of output minus post separation cost. So these are few of the methods, very brief words that I spoke. As I told you, I'll need to take some detailed explanation based on that. I'll do that, don't worry. But after doing this, let me first quickly finish off first three problems. No, I'll bring the textbook in front of you. Just wait a second. There comes a textbook in front of you. In the first problem, you are told physical unit method, we can apportion the cost on the basis of output. Please remember, some people also prefer to apportion this joint cost on the basis of input. You had to calculate joint cost here. I'll remind you, you are using 5,000 tons of coal at 1,100 per ton. So 5,000 into 1,100, 55 lakhs. That becomes your joint cost in this question. In second question, you actually apportion the joint cost on the basis of average cost. That is what is the name of the method all about. So average unit cost method. So average unit cost, your joint cost is 60,000 and a number of units are 1,000. So your average unit cost is 60 per unit, which you keep on multiplying with the number of units produced. And finally, in third question, you will apportion the joint cost on the basis of contribution margin method. You will find out the fixed joint cost, which is given very clearly. You will apportion that on the basis of contribution, whereas the marginal cost In simpler words, we can also refer to it as a variable cost. We will apportion it on the basis of output, that is in the ratio of 100:120. These are the few basic problems. In my humble opinion, the real topic will start from question number 4. I'll discuss that next. Now, as I said, in my humble opinion, question 4 is the actual beginning of the question or chapter, should I use words. Please read question 4. There's something in front of you. Make me invisible. And I'll scroll it up further. Oopsie. You can pause the video and read this. Make me invisible. Make me invisible. You have textbook also. You can surely read it from there. But once now you have read this, I have presented the whole problem in a completely different way. Just a second. I'll bring the board in front of you. Give me 1 minute. The board is right in front of you. Look at that. Now you have incurred 40,000 for salt and 60,000 for conversion cost. So 1 lakh rupees is what you have incurred to process caustic soda and chlorine together till split off point. 1 lakh rupees is your joint cost. It's a totally different point that in the required part they have mentioned 1 lakh as joint cost, but my chart which is there in front of you proves this. Just have a look at the chart once. You can pause the video. I'll keep this so that you can pause the video, and then you can even pause the video to look at this part. Now, so 1 lakh is the joint cost. You have incurred it till split off point. Let me write the names. This is what we call joint cost. This is known as output at split off point. Oh, little font size adjustment. This is known as sales, or rather shall I say SPPU. For SPPU, selling price per unit. I didn't mean to shout on you. Sorry. SPPU at split off point. This is known as actual sales value of output at split off point. $500 tons is known as a final output. $200 per ton is known as a final SPPU. And this is known as final sales value of output. Now you have incurred, I repeat, you have incurred 20,000 to convert chlorine into PVC. You have incurred 20,000 to process chlorine further into PVC. You have incurred 20,000 after chlorine has got separated. 20,000 is known as post separation cost. I told you while I was discussing methods very briefly that all the words which I am using right now, I will explain them in a proper way in detail. This is right in front of you, my dear friends. Now look at the required part. look at the required part. First it says apportion the joint cost on the basis of sales value of output at split off point. I'll write 1 at both places so that you realize on what ratio you are dividing, that is sales value of output at split off point. Physical unit method, I'll write 2, and in that ratio you can apportion. Estimated net realizable value, I told you it is final sales value of output minus post separation cost. I'll just number them 3 and 4 for your understanding purpose, but still for PVC final sales value is 1 lakh, post separation cost as you all can see is 20,000. Post separation cost, so 80,000 is NRV, but naturally we need 2 figures to apportion the joint cost, and that's the point which I'm trying to make. For caustic soda, it is not processed further, so 60,000 remains its final sales value, and the question of post separation cost doesn't arise, so 60,000 in itself will be its NRV. So 60,000 is to 80,000. In this ratio you will apportion the joint cost. It's so simple. The chapter is pretty simple. I told you that very clearly. Now since you have understood this, read part B. There is some offer from some lifetime swimming pool or something like that, and they are saying whether to sell chlorine or whether to accept the offer or not, etc., etc. Simple words, guys, simple words. If you sell PVC, oops, just a second. If you sell PVC, you get 1 lakh. If you sell chlorine, you get 60,000. So you get 40,000 extra if you sell PVC. Wait! But you have also incurred 20,000 to convert PVC into chlorine. I agree you are getting 40,000 extra, but for getting that 40,000 extra, you have spent 20,000. Still you are getting 20,000 extra if you sell PVC. Naturally, offer of that lifetime swimming pool, etc. is not acceptable. We are not going to sell chlorine, we will sell PVC. The question has become so simple, Guys, a point which I would like to tell you, it became simple because this chart which we have put into this place, now see, I totally agree that all of you would have studied this topic earlier, and well, you would have studied through multiple methods. I don't deny. I respect all the methods, and I have a deep regards and deep affection towards each and every method that you have studied for. But if at all you can put in this chart somewhere in your technique, that will make the questions very easy. In fact, even in the next question the same thing goes. If you put this chart, it becomes easier. Now as you saw, the charts are really helpful. I have tried my best to add the charts in every possible problem. I mean, in some problems it may not be possible, that's a different point. If that helps you, I'll be really happy to help you in that case. Guys, we'll move on to the next problem, 5th one. So now, as I said, we'll go to the 5th problem. Just a second, I'll take you to the question. 5th question right in front of you. They have said very clearly that the company's plant processes 1,50,000 kg of raw material at 12 per kg, and then all other costs which are given in the box are incurred to process or to produce 2 products P and Q in the ratio of 1:2. There is a normal loss also of 5%. Very important, scrap value is not given. We are given 12 and 20 as SPP wet split off point. We are further told that P is converted into S. 1 unit of P will give you 1 unit of S, and S will be sold at 15 per kg. that is also given, but there will be a cost of rupees 1,85,000 of converting P into S. So much data. Now, give me a minute. All this data in one single page. Just a second. There you go. Basic raw materials 150 into 12, 15. Total of other cost, that's just given in the box. We are revising obviously. So 4,10,000, total 22,10,000. Normal loss, no scrap value. They have not given any scrap value to us, so nothing can be subtracted. 22,10,000 becomes your joint cost. Input is 150, 7,500 will be subtracted. That's kg. That's kg. Quantity will reduce, no? So that is 1,42,500. 22,10,000 becomes your joint cost. 140 to 500 in the ratio of 1:2. So you get quantity of P and Q. 12 and 20 they have given. 570, 19. Actual sales value of output at split off point. And S, 47,500 kgs, one of P, one of S, 47,500 kgs into 15. So 7,12,500. And 1,85,000, that becomes the post separation cost for S. Now, they have asked you naturally to find out profitability, existing operations, further processing. Existing operations will mean P and Q, further processing will mean S and Q. And what profitability? I mean, they have given joint cost only. Only for S and Q, there will be one post separation cost, which you will write for S. Otherwise, a pretty simple thing, simply because this chart we have prepared. Only point that I would like to remind all of you, my dear friends, is that they have not given any method to apportion joint cost. So we will use actual sales value of output at split off point to apportion joint cost. I will write 1. And yes, in that ratio, joint cost will be apportioned. That's it, guys. That's it. That's the whole problem. This and the chart, that clarifies the whole issue. Everything gets over because of this chart. That's what I told you. If you can, fit in somewhere this chart technique, it will be really helpful. I'll move on to question number 6. I need to go to the textbook. Give me 1 minute. Five products are given in question 6. SPPU at split off point, SPPU after further processing is given. Would like to point out something clearly. Raw material costs are given to you 3590, and other manufacturing costs are absorbed on the basis of their NRV. That is what is told to us in the question. Question very clearly asks you to only absorb those two things on the basis of NRV, which means the question very clearly wants to treat only those two costs as joint cost. This fixed cost should not be based on NRV. No controversy exists. Question says it, we follow it. We can't change the question. Sir, but this should happen, that should happen. I respect all the views. I respect question more. They have said this, will follow this. Simple. And further processing costs, post separation cost, they have given everything. A point where I would like to draw your attention is this. In the first part, they have said income forecast, none of its products are further processed. Second part, they have said A, B and C are processed further. None of its products are further processed. Now, they have said use NRV. Then they are saying none of the products are further processed. You know, I know, both of us know. NRV is final sales value of output minus post separation cost. How to use NRV when none of the products are processed further? We can't do anything. We will have to use NRV as per the question. It's kind of an anomaly. I agree with that, but then nothing can be done. The question says that. That was a point which I wanted to explain, apart from all the other points which I already spoke. Dear friends, now bringing the chart in front of you. Just a second. There you go. I have even written the joint cost and then the chart. 34 lakh, 390, 2 lakh, 2 lakh and 1050. Those are sales value at split off point. Furthermore, below you can see, make me invisible. As you can see, those amounts 50 lakh, 510, etc. Those are nothing else but final sales value. Something which is written in the middle is post separation cost. The question asks you to prepare income forecast. Very easy to create all that. The question also asks you to determine which product should be processed further or not. For that, what do? Pretty simple. It all depends upon situation. Whichever profit is more, or under whatever situation the profit is more, you will select that situation. Sir, what does that mean? Wait, I'll explain. If you don't process the product further, your profit is 1 lakh. If you do process the product further, your profit is 120. Naturally, you will process the product further. But if you don't process the product further, your profit is 80. If you do process product further, your profit is 50. You will not process the product further. That's what I said. It all depends upon the situation. But then, these are simple questions. Voluminous, yes, because 5 products, but otherwise pretty simple. But now at this stage, I would like to pick up a common point for question 6 and question 7. They are very, very similar questions. I repeat, very, very similar questions. So a point where I would like to draw your attention is this. Concentrate, guys. How to calculate profit under both scenarios? If we don't process further, if we do process further, just a second. And if we do process further, see, if we don't process further, we get sales value at split off point. And if we do process further, we get final sales value. Now, naturally, if we don't process further, we will incur joint cost. Even if we do process further, we still incur joint cost. But then, if we don't process further, we don't incur any other cost. If we do process further, we are bound to incur post separation cost. And my dear friends, that's how you will get profit under both scenarios. That is it. That is it, my dear friends. This is the point which I wanted you to understand regarding this particular question 6 and 7 common. My question 6 as such is over, but I will now take you to question 7. Just a second. Now, in question 7, we are told that 3 products are processed together in department P and they are processed further in department Q, R and S respectively. We know that any cost incurred up to split off point is joint cost. Naturally, department P's cost will be joint cost, and since these products are processed further in Q, R and S department, cost of department Q, R and S will be post separation cost for product A, B and C. I'll repeat. All 3 products are processed together in department P and they are processed further in department Q, R and S. what I would like to tell you is this, that means these products are processed further in department P. Split off point will be in department P. Any cost incurred till split off point is joint cost. That, my dear friends, will become the joint cost for all products, whereas cost of department Q, R and S will become post separation cost for products A, B and C. Then they have given raw materials, direct wages, factory overheads, which will be apportioned in the ratio of direct wages. Everything is given. Then they have said, or rather given us, that during the month under the reference all products are processed further and sold as follows. Therefore, we can conclude that 32, 24 and 16 are final SPPU. Whereas the next para says very clearly that if they are not processed further, they'll be sold at 20, 22 and 10. All these three, 20, 22 and 10 are SPPU at split off point, selling price per unit at split off point. All these points, once again, my dear friends, my hard work is ready. I will put it in front of you. Just a second. And you can see that department P cost, joint cost, Q, R and S, post separation cost, ABC. The whole table also I have created, I have kept it ready. Raw materials, direct wages and factory overheads, department P, Q, R and S, they have given everything. I have divided the cost, etc. And then finally 1960 becomes your joint cost. 880, 2 lakhs is your sales value at split off point. 14,8, 960 and 320, they are your final sales value. Amounts written in middle, 172, 800, 115, 200, 64, 800 becomes your post separation cost. Identical problem to previous one. Now they are telling us, if you process further, what will be the profit? If you don't process further, what will be the profit? Decide which product should be processed further, but only change in this problem, method is not given. We will use actual sales value of output at split off point to apportion the joint cost. That's it, guys. With that, I end question 7. Now we will move on to question number 8. And the moment you look at this, you read the word Pokemon. Of course, apart from other thinkings that you have, you realize that it was a huge question. We are told, rather we were given details like every 500 pounds yields this, and then 20 gallons yield this, 30 gallons yield this. Now, since this is a revision lecture, I can take the benefit and now use very technical words. This information given to you was a standard. Your actual information was different. So we had to calculate, revise the standard. Yes, you heard me right. You had to calculate revised standards. It was a simple cross multiplication, and then they've asked you to use 4 methods: sales value at split off point, physical measure, estimated net realizable value. We know all 3 methods. There was the 4th method which was new, constant gross margin percentage method. Under constant gross margin percentage method, the company assumes that it will earn profit at the same rate. It will earn profit at the same rate on all products that it will sell. That's it. That was the point regarding this question. Last part again asks you, could Pokemon have increased its operating income by a change in its decision to fully process both of its products? Guys, it is again nothing else but a decision regarding whether to process the product further or not. I'll remind you, I used the technical words called depth of processing. It's a totally different point that in second part they wanted constant gross margin under all the methods specified in one above. This whole problem I have put it in chart, even typed it, and I'll bring that right in front of you with everything. Give me 1 minute. There you go. I can zoom it a bit. 299, 250, 555, 750. Sales value at split off point. Post separation cost given 3,02,812.5, 623, 437.5. And at the end, you can see 570. Make me invisible. I'm back. Now, in first required part, they have said a portion on the basis of sales value at split off point. So it's right in front of you, 299, 250 and 555, 750. Second part, they have said physical measure gallons. Again, it's in front of you, 300 and 450. Third part, NRV, so final sales value 570, 12, 11, 250 minus post separation cost, which is also in front of you. You subtract it, you get NRV. And in constant gross margin percentage method, what you will do is that you will find profits. You will find profits and then you will calculate gross margin percentage. To remind you, it will be 8%. Once profit percentage you get, you will go reverse to prepare or find out joint cost. That's it. That's it. That was the only point in this question. Of course, they have asked depth of processing, but there you know very well how to decide that. You will take final sales value of both product. You will subtract sales value of output at split off point. Net difference, you will compare it with post separation cost. If the difference is positive, you will sell the products which are named as CP or MC. If the net difference is negative, you will sell products which are CPLB or MCLB. Just to remind you the final conclusion, that one product you are processing it further, one product you are not processing further, everything said and done. But this chart is something where your entire discussion will take place and it will make things so simple. In fact, I have done the cross multiplication also. How to get this information, I'll just show that to you. There you go. I'll zoom it little less for you to understand things. Make me invisible. The below working makes things crystal clear for this problem. Yes, with that I end question number 8. Now I will move on to question number 9. Question number 9 right in front of you. The first part of this question, if you can see the first required part, this was nothing else but process account based on weighted average method. This question is identical to question 7 of process costing chapter. Identical, no change. Amounts obviously will change, no? But apart from that, there is no change in this particular part of the question. As far as the other two parts go, I have kept the chart ready. Just a second. Total output of product A was 1,60,000. They are asking you whether you should process it further 1,20,000 or not. Look at the left hand side of the chart. It will tell you everything. Do not forget one point here, that rather 2 points, that 1 of A will give you 2 of AX, and second, A is processed further in process 2 to make it AX. So process 2 cost will be post separation cost for AX. These 2 points, there you go, the remaining chart. I have even shown the cross multiplication. 4,80,000 is the final sales value. 1,92,000 is the sales value at split off point. Difference, you subtract that, you find out difference, and then you compare it with process 2 cost for 1,20,000. The decision is easy. Only point, in third required part, they have asked you whether to process remaining output further or not. that remaining output you should understand. They are talking about this 40,000 kgs because out of 160 you have already taken a decision on 120 in second required part. So remaining output is 40,000 kgs. Don't forget that. And then they have asked minimum selling price. Remember that particular calculation. Minimum selling price. You will put all the costs together. That, my dear friends, is product A, and that, my dear friend, is the explanation regarding question number 9. Now I move on to question number 10. Question number 10, well, it was kind of a long question. You can make it small. A very important point, rather 2-3 important points in this question, and then it will be easier. First, in this question we are given that there is closing stock also. Some units are sold, opening stock is not there. We will find out units produced. One of those questions where quantity produced and quantity sold are different. Quantity produced and quantity sold are different. So there will be closing stock. Now, the most important point for you to understand in this question is that when you apportion the joint cost, you will use sales value of output, and when you find out profit, you will use sales value of sold quantity. Logically, because you will incur cost for the entire produced quantity, but profit can only be earned from sold quantity. That point you would like to remember, hopefully. And well, if you wish to make this question little smaller, then some tricks I'll offer. First, calculate sales value of both output and sold quantity right at the start, and then they have asked you to find out balance sheet purpose, closing stock, inventory, and so on and so forth. They've asked. Simply prepare cost sheet. That too in columnar format for both methods. I repeat, simply prepare cost sheet. That too in columnar format for both methods. The moment you prepare cost sheet, closing stock automatically will be valued. And that you will get the answer. Cost of goods sold automatically will also come. So this problem, which looks large, will become very small if you will follow these techniques. That was regarding this question. Moving on to question number 11, that is the next one. X and Y products are processed together in department 1. Products are processed further in department 2 and 3. This problem had all sorts of very scattered data. Again, in this question, quantity sold was different. There will be closing stock. If you do 10th question well, then this 11th question automatically will become simpler. Once you read this question, you will realize that department 1 cost will be joint cost, department 2 and 3 cost will be post separation cost for X and Y respectively. Wait, all this stuff I have put it in one screen. Just a second. As always, my chart is ready. Yep, my dear friends, we need to do hard work so that you, my friends, can have a smooth revision. So these are the 1,20,000 and 60 is the output at split off point. 8 and 4 are given to us. Post separation cost, I just discussed the department 2 and 3, and then finally you are given the 1 lakh and 120 as a final output. Sold quantity is different. Again, closing stock will come. The problem practically becomes identical to 10th question. If you will solve that well, this question will be easier. With that, I finish my discussion on joint products and byproducts. Remember, my dear friends, these charts will help a lot in case you can inculcate that in your technique. My next screen will make all of you very happy as always, just like I've been doing in all the chapters. Next screen coming up right now. As I just said, my next screen will make you happy. Next screen coming up right away. There you are. Make me invisible. All the important points of every question are right in front of you. This is question 6 and 7. Make me invisible. Next part. Make me invisible. Nah, now I'm not going to be invisible. There is no need. You can read everything at the back. People are waiting. He'll shout, make me invisible. Array, it's there, no. Then why do I need to be invisible? It's available, right? That's it, guys. This clarifies all the points of every question. I end the discussion of joint products and byproducts over here. I thank you so much for your time, support, and patience, my dear friends. It meant a lot that you have been supporting. Keep supporting. Thank you so much. I'll see you again with one more video, one more topic. Thank you so much, guys.